there, guys. Am I audible? Please let me know if I'm audible on the on our chat. I'm just testing this new mic. Hello, hello. Can you guys hear me? All right. Let me increase. How about now? How about now? Can you hear me? Perfect, perfect. Thank you, thank you. All right. So yeah, it's a new channel, and I'm just seeing how we can maybe grow from here. But let's jump down to business so that I don't take your time. Um, we're going to be back testing the Euro USD, and we're going to be back testing for just last week. We're going to be taking one trade and one session. Then we're going to be using the 2022 model. All right. So I know some of you are familiar with that. I'm not here to teach. I'm just here to back test so that we can see what moves we missed and what moves we did not miss. Something like that. All right. So I'm glad to have you guys here. I'm really glad that you guys turned up. So I'm just going to be using the replay button so that we can see we can see the candlesticks in real time, but in hindsight, of course. So we're going to be using the 2022 model, and I'm going to show you some. We're going to be taking trades, of course. For the we're going to be taking trades during the London session only, and if there is no setup during the London session, uh, we don't place any trade. All right. So and I observed that some persons might get the usage of fair value gaps wrong. So I'm just going to during this back testing, I'm going to clarify on why some of those fair value gap do not work. All right. So go straight to the point, we've been bearish on EU. This is the 1 hour chart. This is the 5 minutes chart here on the right side, and on the at the bottom we have the 2 minutes chart. All right. So the 1 hour chart is the chart for our kind of like our bias. We're going to be using it as our bias. So every break, every lows, every high is kind of like going to be taken from the 1 hour chart. Why the 5 minute chart is something that we use to frame our entry. All right. Then the 2 minute chart is what we use to take our trades. So this is on Sunday. This was on Sunday's no, right, this is a Friday. So the next candle you see will be from Sunday. So I'm going to use the replay button to just print things out. All right, so that's Sunday's opening, and according to ICT, the key zone we are using is the 2 o'clock to 5 a.m. New York time. All right, so my chart here is set to the New York time. You can see there my chart is set there. So we're going to be marking out 2 o'clock, 2 a.m. to 5 a.m. New York time. All right, let's just speed things up because Sunday is still printing, so we need to come to a Monday. All right. Let me increase the speed. Yep. So this is all noise. Yeah, PM session soon. This is our first episode. All right, we are all right. This is a new day. So we have the 2 o'clock, sorry, the 12 o'clock candle, midnight time. I'm going to draw that out. All right, so that's that line you find. Let me draw it out a little bit more. All right, so that's the midnight opening, and we are watching price. Anything below the midnight opening, since we are looking for bearish price. If we are below the midnight opening, there's no need to be chasing price to sell. You just wait for your key zone, and there are certain factors that we see here today, and we know that this is a trade, and this is like an A plus trade for me. All right, so all this is still noise because the 2 o'clock bear is still not here. This is the 2 o'clock candle. We've still not gotten there, so all this is noise. I'm just going to mark it out. All right, there. Let me make it a bit thin. All right, so now we are above we went above the midnight opening. Yeah, something like that is. Mind you, I told you that we were bearish, so we are bearish on the higher time frame, and we are only looking for kind of sales. That's what we're looking for. All right, I'll just pause the time there, then show you something. All right. Now, what you have here, you have a fair value gap on the 1 hour chart, and if you look towards your left a little bit, you find this green candle. All right, this is what ICT classifies as. This is what ICT classifies as another block. So we're going to say above him. All right, so to clarify what you're saying, Wisdom, we are backtesting the Euro USD, and we are using the 2 o'clock candle, but we are not just selling once it's 2 o'clock. We are not just selling. once it's 2 o'clock, we have to wait for certain things to come in place, because um, as according to the higher time frame, we've been bearish, but we need certain criteria to actually form before we actually take any trade. All right. Other than that, we'll just be jumping into um, like we are chasing price. So we have to wait to for first of all, we have to wait for like a buy side to be validated before we can expect a significant move to the downside. All right. So I'm just going to continue the now we've taken out buy side here, but on the 5 minutes chart, we have to see, according to the 2022 mentorship, we have to see this low validated and the fair value gap created. Now, as you can see, we did violate the low on the 5 minutes chart, but there was no fair value gap yet. No fair value gap yet. Let me change this. There's still no fair value gap yet on the 5 minutes chart. Now we hit the midnight opening price again. We are going to be using, like as I said, we are going to be using the 5 minutes chart as our time frame for our trade setup. We're going to be using that. So mind you, the other block is still above. The other block is still above, and we are here to hit that. We did violate this low. Let's wait if we have a gap. There is a tiny bit of gap here, but the reason why all this is just like if you look at the 2 minutes chart, it's like a range, and you don't want that. You want, if you are trading a range, you want some price to actually clearly take out one side of the market, then you can expect it to reach for the other side. All right, its time is 4:30. No trade set up yet. We are ranging. Mind you, this is a Monday, so Mondays you can expect price to be like this. Typically, I don't trade on Mondays because of the kind of price action we get. But you can expect Mondays price action to be like this. Mondays and Fridays, especially Mondays and Fridays. So after 2 o'clock, this line here, we've not done anything significant. We just going up and down. Yeah, that's the kind of candle I want to see. That's the kind of candle I want to see, clearing out this buy side. We have finally entered into the other block. We have finally entered, and we have this rejection on the 5 minutes chart, which is nice. Then as you can see on the 2 minutes chart, there is a swing low there, so we can classify this swing low as a shift in market structure to the all right, make it a bit all right. So now mind you, we just passed the 5 a.m. time. This is 5:30, but we did take out buy side, and we are inside another block that could repair price. Always watch your higher time frame to actually see what the bias is doing. You can actually see that clearly on your higher time frame. All right, we're just going to move it a little bit. Now, there was a shift in market structure here, and what do we have here? A fair value gap. We have another tiny one above there, so we can allow our stops to be here. This is the kind of trade that I would take. Why? We've clearly taken out buy side. Price has taken out buy side aggressively, and we see a significant retracement and a shift in market structure. And what do we have here? A fair value gap. So this is the kind of trade that I would take. My stop to be above here or above the other block, but basically above here, because I don't want to see the other block completely filled up. All right. So for this section, we are going to be using a demo account of $100,000 so that we can have a proper calculation. And on each trade, we are not risking more than 1%. Right? If the risk is more than 1%, we don't take the trade. So we are going to set there. Perfect. Then our stop will be above this high. So that's like roughly $400. And our take profit will be, you have this you have sell side here. What do you have here? Relative equal lows. So you have an option to take your profit below there or take partials, or we have this low here or this low here. But for the sake of, we're just going to be using taking trades on low hanging fruits, and we're not going to risk or aim for large runs, so that this session can be very short. All right. So and we are always going to aim for 2 hours minimum of 2 hours. All right. We have take profit of 900, which is more than 2 hours. It's good. Mind you, this is just below this black line here is the midnight opening price. So it's just below the midnight opening price, and from what I've understand, you want your stops, you want your take profits to be lower, because the expansion of the daily candle will not just stop at the midnight opening price, or else it's going to be like a wiki day. So we are going to, our take profit could be lower. Can drag it down a little bit. All right, so we have relative equal lows here as well. We are not going for this low here because price might just reverse. But mind you, we are we have already established that our bias is bearish. So from the midnight opening price, which is this line there, down to this low here, we have just 7 pips. So pretty much going to be an easy run, because the expansion of 7 pips for a day's candle is nothing. All right, but this is our framework. Just remove your mind from the monetary value. Remove your mind. Just, this is your framework. You have buy side being taken out and the shift in market structure inside another block. So and a fair value gap. So we have this certain criteria being met before we actually think that this trade is viable or valid at all. So we're just going to continue. Let me skip it a little bit. Now we trade higher into the gap. trade higher into the gap, then hits the low of the other block. Now we're still going to be watching the 5 minutes chart. If it's giving us the narrative that we are going to keep pressing into this fair value gap here, and it won't hold price. Right, so the midnight opening price is always like a magnet to it's always like a magnet, and we are going to be watching how price gravitates towards it. We are going to be taking one trade per session. Mind you, if you are in a trade and you are seeing some certain criteria that are giving you the idea that your trade is valid, it is best that you draw them out. As you can see, there's a fair value gap on the 5 minutes chart here, so it's best that we draw them out, and you watch how price actually respects it. So you can be another seller there to still aim for this low here. You can add another position there. Alright, we hit the midnight opening price. Sometimes I always find a retracement whenever this happens, so it's you can take partials. You can always take partials when we hit that, if you are not sure that especially if you are trading against the trend or against the higher time frame buyers, because I always expect retracements after hitting the midnight opening. Alright, there's a fair value gap there as well. Drag it out, yeah. So there's a fair value gap there. We hit it, we traced into it, then continues lower. Our take profit is just a few pips away. We are not risking more than 1%. You can even risk 0.5%. It's up to your risk appetite. Very close to it. If you are in this trade and it's very close to your take profit, will you be closing it, or you just let it run? Perfect. So that's it. That's the trade. A very easy model, I must say. The 2022 mentorship has actually been the easiest model I've found in terms of what ICT teaches, because he breaks down everything. There are certain things that you're watching, and there are certain things that we actually give you the idea of your trade. First of all, I'm just going to go through a quick review. We've already established the fact that we are bearish, and according to the power of theory, if you are bearish, you want to see price first go up before coming down. All right, and if you look at the higher time frame, when price opens, what we have here, we have an expansion upwards towards the other block, and you can see the fair value gap also holding price to push higher. So, and if you now implement the factor of time as well, if you implement the factor of time, what do we have? We have the London key zone. All right, we have the London key zone. So with all this in mind, we are not going to be chasing um, shadows, all right? We already have a framework, we already have something that we are watching. And at this time in price, a few minutes after 5, what do we have here? We have an expansion to the upside, clearing out buy side. Buy side is already out, and after buy side is taken, what's left? Sell side. So we have this relative equals here, and the old low, this low, I think, yeah, this lows here, this relative equals lows as well. So we have this as our trade idea, and there's a shift in market structure. If there is no shift in market structure, we don't take a trade. We don't take a trade. And if there's no fair value gap, we don't take a trade as well. All right. There has been lots of fair value gap before this expansion upwards. There has been a lot of fair value gap. Lots. You can actually count a lot. But has there been any shift? Some no. Has there been any run on liquidity? Some no as well. So this is what you use to classify. This is why some of your fair value gaps don't work, because you don't wait for price to actually deliver it into your hands. And also you need to also apply the factor of time as well. So we have this push up clearing out buy side there, no buy clearing out buy side. People that have been short before, their stops will be above here, we cleared that. And people that are buying because of this momentum upwards, they are already triggered in. So we have two participating parties inside this: sellers that were short and buyers that are buying above all highs. So there you have it. But you have to wait. You don't just sell after this. You have to wait for this to happen. You can drop once this happens on the higher time frame. You can drop to a lower time frame to check. All right. So with that being said, this goes for Monday's London session trading. So it's pretty much a good trade. I think it was kind of like, let me just say 3.5, right? For the sake of running things up. 3.5. It's not a bad trade for Monday. So we're going to be skipping to Tuesday ASAP. Mind you, there are still trading opportunities during the New York session. There are trading opportunities, but we're not going to cover that here. For starters, I think I need to get another mic, and we need to just run this session and enjoy our weekend. All right. So I'm going to skip. There's something that you should back test. Whenever prices, if you are expecting lower prices, whenever price is below the, alright, whenever price is below the midnight opening, that's 12 a.m. New York time, you need to actually backtest how price reacts when it's, say you are expecting lower prices, you need to actually see how price reacts above that opening price and below the opening price. All right, you'll find, and even inside the opening price, you find out that it draws towards the opening price like a magnet. Yeah, we are going to show another example on Tuesday. I'm going to show you, mind you, this coloration is just is the Asia range. So he teaches that in his other episode, in his other playlist, his other lectures. I think the market primer course. Yeah, I think that's the one he teaches it. So we have the opening price to be here. I'm going to drag that out. We are waiting for 2 a.m. So that tiny line is our opening price, our midnight opening price. We are below the opening price here. If we are expecting price to actually go lower, once 12 a.m. opens, we want to see price go above an ODI or take out an ODI. So if you are expecting price to behave like that, meaning that you can actually look for a buy that can take you above that ODI, which most times I normally use the Asia range. The Asia range is 7 p.m. is the highest high between 7 p.m. and the lowest low to 12 a.m. So we have that as our highest high, and the lowest low is kind of like here. We have a low swing low here, but the lowest candle is this. So we have this as our Asia range. This is low. The low of the Asia range is here, and the high of the Asia range is there. There's an indicator that I'm using. I think this is the name, Asia range Nico 948, right? So you can actually search it by going to indicators and add them. But this is what I just like to use, so that normally before I draw them out, I mark the highest high and the lowest low. But since I found this indicator, I just let the candle print the Asia range as it moves. All right, so we have this as our idea. We are below the opening price and we are bearish, so we want to see it go above. We are not just going to sell once price opening because we are bearish. We always wait for a sweep of liquidity. We always wait for that. And with this idea of us being bearish and expecting price to take out a sweep, which is above here, above the Asia range, you can see it on the 5 minutes chart here, above the Asia range. It's as I mentioned, it's 7 p.m. to 12 a.m. So we have that as our range. So we can actually look for price when it's 2 o'clock. We can actually look for a setup. Since we open below the Asia range, we can look for a setup to take us above the Asia range and above the midnight opening. All right. So I'm just going to make it slow a bit. And before we take a trade, there should be a sweep of liquidity and a shift in market structure. When you find a shift, now this is what we like: a sweep and a shift. We need to find a shift in market structure. And it should be like a candle like that, something aggressive and has a fair value gap as well. That one was aggressive, but there is no fair value gap, so this clearly disqualifies that idea. So we need to wait for a violent candle but also leaves a fair value gap. All right, we clear out this high, take out these highs here. Don't need to be 2, it could be 1, but this is like a shift in market structure. And our idea of where price should reach to before continuing in the higher time frame direction should be above the Asia range, which is here, above the Asia range. So that's our idea, and we've had this. There's a shift, and is there a fair value gap? Yes, there's a fair value gap, and where if you're entering a trade like this, where do you keep your stops? Your stop should be below the swing low that created the fair value gap. So below this low could be our stop. So our trade entry should be here at the low of this candle. Let me just draw out the fair value gap. All right. So we're going to see price reaches into it. Bam, there is another fair value gap inside the higher time frame. That's the 5 minutes. Trade into it. You can be a buyer there, stops below here, and your take profit will be above the high, the Asia range high. But you can still, this is what I normally use the lower time frame for. If there is a fair value gap in the higher time frame, I can go lower to a smaller time frame. For this lesson, we are going to be using the 2 minutes chart. So on the 2 minutes chart, is there a fair value gap there? Yes, and you can see there's a fair value gap which is close to this bearish candle here on the 5 minutes chart. So we can classify this bearish candle as another block. So we have this idea. We are already inside the fair value gap on the 5 minutes chart, but there's still space for it to drop lower. So if it's dropping lower, where should it reach to? You have to drop to a lower time frame, which is this. On the 2 minutes chart, another fair value gap. So this is our bus stop. This is where we want price to reach to before pushing for the buy side. Almost. Mind you, this is why lower time frame fair value gaps do not work on their own, because as you can see, there's a fair value gap here, so someone can be selling there. So on their own, on its own, if you are selling here below the opening price, like you are selling inside a discount already, so you need price to go to a high, to take out a high. In this our lesson, we are watching the Asia range high. We need price to go there before we can actually expect any lower prices. So look at this 2 minutes chart. There was a fair value gap here. If someone sold here, he's just selling at a discount. So you need to also look at the 5 minutes chart. Was there any gap there? Was there anything there? No, there was no shift in market structure. Nothing on the 5 minutes chart, just on the 2 minutes chart. And this can still be seen on the 1 minute chart. So we don't have this trade idea to be sales. In fact, as long as price opens below the midnight opening price, we don't want to even see we don't want to be selling at that time, because while we are already below the opening price, I want to see it go above the opening price, take out a high before we can sell. So we already have the idea of we should be going higher before we can go down. So this is the idea that we want to use to take that quick scalp that we want. So this is the idea. So fair value gap is almost. You have to be patient. There's our entry. So I'm going to be buying there. Stop loss below this low here, $400. This is still below our threshold. We are risking at most 1%, but that's $400, which is 0.1%, 0.4%. So our exit will be above the Asia range. So I'm going to just put it there, above the Asia range. That's our exit, which is kind of like let me check. Yep. So this is kind of like 5.6 hour. but let's just say 5 hour. All right, no, I drew. All right, so that's our risk. All right, we're going to continue. We dropped lower. We're going to watch if we are respecting that gap almost at the stop. Boom, that's a loss. That's a loss. The strategy is not 100%, so that's why you should always have a loss, have a stop, sorry. That's why you should always have a stop. So we are still below the opening price. This thing disqualifies every trading idea to be selling. It still disqualifies it. We took out this low here just by a pip. Now we push higher. There's a shift in market structure here. There's a shift in market structure here, and there's another fair value gap. Let me take this one off. This is why you should always have a stop. Alright, there's another fair value gap there, and there's a shift. We already took out sell side, so there's a shift. Now we're going to watch if price drops into it and gives us a nice run above the midnight opening. We hit the higher fair value gap there, so we can be a buyer there, or because we already took a loss, we can just wait for price to drop into a discount right there. So I'm going to take this video a little bit back so that we can have our entry. All right, apologies if this stream is actually not what you expected, but this is the first, so I would love to take suggestions from you guys. This is my first time. All right, so we are going to wait for price to drop, yeah, right there. So let's just push a button, because of sometimes the spread could also account for that kind of slippage, but we already have our idea. Our stop is here, $400. Take profit above here, which is actually a good risk to reward. We're risking $400 to get $200, which is like $2,000. It's like 5 hour, more than 5 hour. So let's watch. Let me drag out the midnight opening. All right. Whenever you place a trade, if you are seeing opposite ideas that you are opposite ideas to your trade, say for example this fair value gap here, you are not sure if it should you want price to actually go above it, so you don't want this fair value gap to hold price. There are things that you should actually look out for. For example, you need to watch if price covers the fair value gap. If price covers it, once price covers it, you can always know that, yeah, we are going for the top. But if the fair value gap holds price, I'm not talking about wick, I'm talking about the body. If the body of the fair value gap covers the price, covers the if the body of the candle covers the fair value gap, sorry I'm rambling, but if the bodies of the candle covers the fair value gap, that gives you an idea that we are going to keep going higher. If you look to our old trade, you can find out that this fair value gap here was covered by this candle. It was covered, or the fair value, the whole bulk of the gap was covered by this candle. So this alone also gives me an idea that we are going for this top here because of that. So I don't want to see the fair value gap that I'm trading inside being covered by a candle. So for example, like this one, you can find out that the wick went down, but we didn't cover this fair value gap. We just traded into this one and rejected it. So that's it. That's what I wanted to draw your eyes to. Now you can be dragging out fair value gap that you meet along the way to see if price respects it. Can be dragging fair value gap just to see. Anyway, you get the gap. This is a gap, and we are very close to our stop, our take profit. Sorry, we're very close to our take profit. At this point in time, you can drag your stop to, you can drag your stop loss to break even. There's a fair value gap on the 5 minutes chart here. We almost hit the SR range high there, almost, but we did not. So we still have buy side up there. I want to see if this kind of fair value gap will hold price. No, we did not. We closed above it. Boom. That's our exit. That's our exit. This trade idea was formed here. We took out this low, rallied high, created the fair value gap here, traced into it, but we failed to push higher. But still, we did not chase price lower because why? We are already below the midnight opening. So we want to see price go higher. But because we want to see price go higher doesn't mean that we should run and chase any green candle that we find. We have to wait for price to deliver itself into our hands. And what we have here is something. You can see the shift in market structure here. After taking sell side, shift in market structure, rallied higher, drops, rallied higher aggressively. The body of the candle should also give you the insight that this is a trader you want to be in. So we rallied higher aggressively, then dropped into the lower fair value gap. It's best to be a buyer at the higher fair value gap because sometimes price doesn't go to the lower one, and sometimes it just pushes and forgets about the lower one. But sometimes it does go. That's why you have to put your stop to account for this kind of run. All right. So, but our stop was here, and we were triggered in here. All right, our stop was below this low, but we're triggered in there. So this is our idea. What we have below the opening price, we drop lower. So if we are bearish in the higher time frame, what do we see? What do we wait to see? Want to see price take out an old high and create a shift in market structure. So because we are expecting price to go higher, we can use this idea to actually frame our quick scalp. That's what I call this kind of idea because I'm trading against the bias. The bias is bearish. So if I'm risking here, I'm going to be risking anything lower than my normal risk. For example, I'm risking 1%. In this kind of trade, I can risk 0.5% because I'm against the bias. All right. And this all happened inside the 2 o'clock to 5 o'clock candle. So you have to take that into consideration as well. That is time. It is time and price, guys, not price and time. So you have to know this. That is why sometimes your fair value gap do not work, because you might be trading outside the required key zone. All right. So that's that for this trade. The first trade was 3.5, and this trade was 5 hour. So it's a pretty decent strategy. It's very easy to comprehend, and it gives you the leverage of not over trading. So if you have not seen that playlist, please go and watch the playlist. All right, it's there on this YouTube. Try and watch it, digest it, and um, back test it as well. All right, so this is Tuesday, so let's skip to Wednesday. We are trading just the London session. I'm sorry if you want both the New York as well, but we are just trading the London session for this live stream. So what does ICT say regarding news trading? He doesn't encourage it. It doesn't encourage news trading. So there are days whereby we have high impact news, and I will tell you this is the reason why this fair value gap was not respected, and this is the reason why your strategy was not respected. All right, let me just hold on for the folks that trade the New York. Now, because we are expecting price to go higher, so we've taken out the HR range line. Please turn your eyes to the 5 minute chart. Let me make it big. All right, so because we are expecting price to go higher, we did get it there, but because of the kill zone for the New York session is 7 a.m. The key zone for the New York session is 7 a.m. 7 to 10 a.m. Where is it? But that's just it. So we're just going to do a quick touch on it. Now 7 a.m. price drops, rallies higher, takes out buy side here. Because we are bearish, we have to wait for a shift. What do we have here? Drops aggressively. This is a swing low. There's a shift in market structure there. A swing low here. This is a 5 minute chart. We trade into the fair value gap here. And what do we have here? A retracement lower. So this is like, if I'm not mistaken, another 4-hour trade. So could be something that you use, but because of the fact that we are not dealing with the New York session in this live, we're just going to skip. So let's proceed. The liquidity sweep is key. There should be a liquidity sweep. If not, you are going to beat the liquidity. So there should be a liquidity sweep. Once there is, you wait for a shift in market structure. All right. Yeah, the Asian range is printing. Mind you, this is not an indicator that tells you when to buy or when to sell. It's just me being lazy. I would have drawn this high out, but I just allow trading view to do its work for me. All right, there we have the midnight opening. You always have to draw that out in time. The midnight opening 12 a.m. Alright. We are bearish, remember. And we are waiting for 2 o'clock open. Trying to drag this guy. Alright. What do you have there? That was a using part. That was a using part during I think it was the 2 o'clock CPI on GBP. Alright. So we drop lower. Again. Hold on, let me press it here. We drop lower. So we should already remove the idea of sales, right? We should already remove the idea of sales. We need to wait for a shift in market structure after taking sell side, which we've had. Sell side was taken out here, and the shift in market structure, we have that here. Even on a 5-minute chart, there's a shift as well, which is good. So we want to see if we create a fair value gap and trade into it. There's a fair value gap, we've hit it. There's a fair value gap on the 5-minute chart, and there's another one. There are two actually on the 2-minute chart, so there's another one lower. So we can still use that idea, that framework of us waiting for price to hit here, or we can just buy. But I'm going to buy because sometimes you should not actually think that you're perfect. All your trades are not going to be. Oh, I'm buying at the wrong I was buying at the wrong screen, so I'm going to close that and buy out the 2-minute chart. This is where we have our trade history. So I'm going to buy here. Alright. Stop loss, of course, below here. Is this this is lower than our expected this is lower than our expected risk, which is 1%. So I'll take profit, of course, above the Asia range high. It could still be higher, depends on what you find okay for you, what you find fit. But this is our trade idea. We're going to watch how price reacts. So on Thursday, which is the next day we are going to backtest, we have several news. We have several news that day. You can see how price is ranging. You can see how price is ranging, hitting our entry, reversing, hitting our entry and reversing. This is why you have to be patient, but you need to actually watch the bodies of the candle. Let me draw this fair value gap on the 5-minute chart. I think this is our primary. Alright, so we're going to be watching the 5-minute chart. If we drop below the fair value gap, if we close below it, that gives us the idea that this trade is going for our stops. Alright, but if we keep respecting it, just know that we might finally get our TP again. So let me just fast forward it a bit. We'll stay inside the fair value gap. Watch the 5-minute chart because it's a 5-minute fair value gap. We like to see candles like this. And we've hit our take profit. So this is like As I said, you can allow your take profit to be much more higher, but this is the kind of trade that will require you to be patient. Not all trade that you enter will just run to your take profit ASAP. So you have to wait for some time, and I think this was like 2 hours before it started working smoothly. But again, there's our trade. We've hit one stop loss and five take profits, which is good. So again, you are done for the day. You are done for the day. You only trade the London session. You are done for the day. You don't care what the New York session will give you. You just know that, yeah, you're done. So let's move to the next day, which is on Thursday. Thursdays and Fridays are days that Fridays and Mondays are days that you should avoid trading, but for the sake of this lecture, I will just show you what happens on Fridays and what you should avoid. And also days where there is news, you might get if you don't get your entries during the London session, I'll just advise that you stay clear of the New York AM session. You can trade the PM session, which is fine, but we're not going to cover that here. But it's best you avoid the AM session if you don't get your entry in the London session. Just avoid the New York morning session. All right. So all right, there we have the HR range is printing. As I said, ignore the monetary value. Just look at the percentage and the risk to reward and the process, how the trade forms, what happens before it forms. That is what should be your idea, not the fact that you are up 4%. No, that's not it. All right, there we have it. That's a new day, London session. So we're going to be we're going to be marking out the midnight opening New York time. All right. And again, time and price. We wait for what? 2 a.m. All right. So Thursday is a day that we have news. We have lots of news today. So we have to wait. We have to see if we get an entry on the London session. If not, we wait for the New York session. Now, we are expecting lower prices, right? Now we are below the opening price and just below the HR range low. So if I should be a seller here, I won't be selling after we take out this low, then create a shift. All right. So if I'm to be a buyer, I'll be buying after we take out this low and create a shift, then we'll buy to this guy, then maybe sell. But other than that, we are just ranging below the opening price right now, so there's nothing to see here. So let's just move forward. This is 2 o'clock. We are hitting the opening price. So this is the kind of something you expect on a day where you have different high impact news. Now, mind you, the reason why we won't take this buy, or we won't even consider this buy, is because of we didn't go below this HR range low, so we didn't take out liquidity. There should be a liquidity sweep before you actually even think of there should be a liquidity sweep before the shift in market structure. All right, that is how I frame. Now this is something that is good, so let's see if we get a shift in market structure now. Other than that, time is running. If we don't get a shift in market structure, we didn't take out this high yet, but there's a fair value gap. So This is something that might or might not work, but this is not what I classify as my A plus setup. Because why? We took out the low, which is good. um, there's a shift in market structure here. Trade higher, drops. So this is a, what's it called, this is a day of I think four news drivers, no, three news drivers on USD, and two news on, no, three also as on EU, so on euro. So we have six news coming that will affect this pair. So we might see some things that might not be good, but for the sake of this lecture, I will still take this trade. But of course, we have a stop loss, which is good. We have a stop loss, so we are going to be buying there, and stop loss will be below this low. Yeah, below this low here, which is still under our risk, and our take profit will be here. So that's good. That's I think 6 hour. So we're just going to continue, and boom, we've stopped out. Stopped out. Got stopped out there. So this is the kind of day that I will actually avoid trading. We are still ranging. We are still ranging on the opening price, the midnight open. We are still ranging there. So this is the kind of day that I might avoid, or as you have it, we hit stop loss, which is no big deal. Trading is a losing business. You just have to learn to accept your losses. This is something that you could also take, but we didn't go below this low, but it went higher, then dropped lower. So this is a fair value gap. So this is something that there's a fair value gap here. Let me make it clearer so you see. I don't know how to remove the demo trade results. I don't know how to remove it, but just so you see. But we closed below the fair value gap here, which is something, as I said, might next thing will be going for these lows here. So basically not a day that I would want to trade. Yeah, that low tapped. And yeah, that's 5 o'clock. So if there is no trade setup before the kill zone ends, I think it's best to, especially on days where we have high impact news, I think it's best to just go off, do something with your time, and leave the market for gamblers. Because as you can see, there are lots of fair value gap that it should respect, but we have weeks and there's a long week everywhere. So not my kind of day, but the idea still remains that we are below the opening price, so we are not looking at sales and only buys, and until we take out this SR range high and get a shift in market structure. So that's kind of like something that you can still use. It all depends on when you are placing your stop, or if you are trading with that stop. But I don't advise that. So let's just skip. So 2 stop loss and 3 take profits, and we are still up 4% with risking less than 1%. Alright, we've taken out the SR range high, and price is approaching that news time. What do you have there? Now this is this was the news. There was news that 8:15 a.m. and there's another one at 8:30. So typically this is something that you could have used. Price, look at the 5 minute chart, price just below this guy here, this swing low, creates a gap, trades into it, then sells. Normally this is what you could have used, but look at how what price did. It went up and cleared out everything, cleared all the stuff. So this is a day that you could avoid. But with that idea of we are below the opening price, I want to see it take the Asia range high before dropping. It's something. That's that's gem, bro. Now this was the uh 8:30 news. So when you go to the 1 minute charts, you can actually see a shift in market structure, and the candle before 8:30 just straight into it. Then when 8:30 came, it dropped into um, the lows down here. So there was actually still something here, but I don't advise that. All right, because sometimes your stops might not be respected and you might just blow your account. All right, this was the business on Thursday. Now for we're just going to skip to Friday, but I don't trade on Fridays, but I'll just show you what Friday looks like. So basically we've been dropping um for the week. We've been seeing lower prices, we've been dropping, and on Friday tends to have a retracement into, because of if you look at the weekly candle, you find that the top has a wick and the bottom has a wick. So on Friday tends to give us that wick by retracing into um, the weekly range. So let's just skip and go to Fridays. I promise this will be faster next section, or much more better. Just send me your suggestion, guys, so that yeah, we do this, and we just chill here couple of minutes and we're done. So the Asia range prints, I'll show you why Friday's trading is actually messy, but you can find something there. But for me, nah, I don't like Friday's trading. And there you have it. So we are heading to the top of the Asia range high. Yeah, Friday is usually a reversal day, so we might be seeing reversal. But typically, what I will expect is at least a short-term low, or this low being taken out, and a shift in market structure to the upside. All right, and to the upside, I mean into the, look at the 1 hour chart, into this big um, fair value gap here, this big imbalance. That's what I'll be looking for, that kind of trade. I'll first of all want at least a short-term low. Let them be a sweep before we actually push higher. So wait for 2 o'clock as usual. We've already taken out the high of the Asia range, and 2 o'clock, yeah, so that's 2 o'clock candle. We drop in, we hit the midnight opening price. Alright, we took out this low. Let's see, there's a shift. No shift yet. no shift on the 1 hour chart. On the yeah, there's a shift now on the 5 minutes. Is there a fair value gap? Let's wait and see if it trades into it. It didn't trade into the 5 minutes fair value gap until then closes, drop down. So we're having this kind of range. We've taken out sell side again. Let's see, there's a shift in the 5 minutes. No shift yet. Drops down, took out the low again. Let's wait for shift. Mind you, we are already after the London kill zone, so this is not a trade that we would even be thinking about, but this was Friday's dealings. This was Friday. No shift yet, except yeah, there's a shift here. There was a shift here. Took out this whole shift, dropped into it, but this is 6 o'clock, so outside our normal time that we trade. So let's just watch, and because Friday will close in Friday closes earlier, so let's just watch. Of course, we're expecting a reversal, a shift in market structure. Take out sell side here. Watch the 5 minute chart. Take out sell side, then rallies higher, shift in market structure, trades into it, then reverse. Alright, this is actually not a bad trade, but not a day that I'll trade, and I don't recommend. Alright, there. So that's that for this section, and I thank you for joining in. We'll do more of this in time. But please drop your suggestions. Please join our Discord and drop your suggestion. I'm always available there. All right. And with that being said, enjoy your day and have a good weekend. All right. Rest, relax. And yeah,